Rebellion in Russia could trigger sell-off in US stocks and flight to safe assets, analysts say. The rebellion in Russia is a major geopolitical event that could have a significant impact on the global economy. If the rebellion succeeds in toppling the Putin government, it could lead to a period of instability in Russia and a disruption of the country's oil and gas exports. This could have a negative impact on the global economy, and could lead to a sell-off in US stocks. Some stocks that could be affected by this event include energy stocks. These stocks could be hurt by a disruption in Russian oil and gas exports. Financial stocks. These stocks could be hurt by a decline in global economic activity. Technology stocks. These stocks could be hurt by a flight to safe assets. Yellen says more bank mergers likely this year. Treasury Secretary Janet Yellen's comments about more bank mergers likely this year could be a positive for bank stocks. Bank mergers can lead to cost savings and increased efficiency, which can boost profits. Some bank stocks that could be affected by this event include JP Chase. This is the largest bank in the United States, and it could be a target for a merger. Wells Fargo. This is the second largest bank in the United States, and it could also be a target for a merger. Citigroup. This is the third largest bank in the United States, and it could also be a target for a merger. Montana bridge collapse sends tank cars into Yellowstone River. The bridge collapse in Montana could have a negative impact on the transportation of crude oil. The collapse could also lead to an environmental disaster if the tank cars spill their contents into the Yellowstone River. Some stocks that could be affected by this event include railroad stocks. These stocks could be hurt by a disruption in the transportation of crude oil. Oil and gas stocks. These stocks could be hurt by a decline in demand for crude oil. Environmental stocks. These stocks could benefit from increased regulation of the transportation of crude oil. Powell wins over bond traders dialing back bets on deep downturn. Federal Reserve Chairman Jerome Powell's comments at a press conference following the Fed's meeting helped to calm investors' fears about the economy. The yield on the 10-year Treasury note fell to 2.93%, its lowest level in 2 weeks. This is a positive development for the stock market, as it suggests that the Fed is not planning to raise interest rates too aggressively. This could lead to a continued rally in stocks. Some stocks that could be affected by this event include tech stocks. These stocks could benefit from a continued rally in the stock market. Consumer discretionary stocks. These stocks could benefit from strong consumer spending. Healthcare stocks. These stocks could benefit from a growing aging population. Stocks tumble on Friday. Nasdaq snaps 8-week winning streak. Stocks tumbled on Friday, as investors sold off risky assets amid concerns about the global economy. The sell-off was led by the tech-heavy Nasdaq Composite, which fell 2.8% and snapped an 8-week winning streak. The S&P 500 fell 1.9%, while the Dow Jones Industrial Average fell 1.6%. This sell-off could be a sign that the stock market is entering a period of consolidation. However, it is too early to say for sure. Investors should continue to monitor the situation and adjust their portfolios accordingly. Some stocks that could be affected by this event include tech stocks. These stocks could be hurt by a sell-off in the stock market. Financial stocks. These stocks could be hurt by a decline in global economic activity. Energy stocks. These stocks could be hurt by a rise in oil prices.